Today we're going to be talking about the top 15 tax deductions for small businesses, and we're going to do that right after the intro. I'm an entrepreneur, I'm an entrepreneur. Hey, whoa. I like doing that. I haven't done that. For those of you who have been around since the beginning, I used to do it all the time in the beginning of my videos, and I don't know, I just wanted to do it again. What's up, YouTube? This is Michael, the entrepreneur, coming back with some more entrepreneurial content. Like I said in the intro, today we are going to be talking about the top 15 tax deductions that you can have for your small business. And with that said, I do want to give you guys a disclaimer. Any and everything that I say in this video is not meant for your legal or tax advice. This is just information. You can do with it as you please. But if you want more information and you want more insight to your particular predicament or how you can, what laws are out there for you or what your tax situation, please reach out to your lawyer or your local CPA, because that's not me. I'm not your lawyer or your CPA. So the main motivation for me creating this video is because there is a lot of people out there, a lot of small business owners like you, startup business owners that are not getting the right tax deductions, and you guys are paying, along with myself, we're paying more than we should. Did you guys know that there is $1 billion that the IRS is collecting from small business owners for two reasons? For one, they are not preparing for their taxes correctly, and number two, they're not taking advantage of all of the deductions that are given to them. So many of you guys might be asking, what is a tax write-off or a tax deduction? And this is an expense that can be deducted from your income due to business purposes. So anything that you are using, or any money or expense that you acquire based off of you taking care of managing your business, then you can write that off as a deduction. Some of you guys might be saying, what types of things can you write off? And it falls into two categories. The first category is going to be ordinary. And ordinary means anything that is common or accepted in your particular industry. For instance, I'm a graphic designer and I print apparel. So one of the things that I have is I have to pay for blanks. I have to pay for different materials and inks and things like that. So that is something that is ordinary and common in my industry. So that is a cost that I'm going to acquire. The next one is going to be necessary. And this one's a little bit more broad, but it's not particular. It's just anything that's helpful or useful in the execution of your business. So if it's something that can help you better run your business, it can be like, no one has to go out and get QuickBooks, but if you want to get QuickBooks to help with your bookkeeping, then you can do that. So that kind of falls into that. So it's decisions that you make as a business owner that helps the running of your business, or any expense that you acquire based off of, you know, just it being helpful for you running your business. So the IRS is not going to make it easy. There are rules, there are regulations, and there are exceptions to some of these tax laws. But for the most part, there is a lot of tax deductions that you can have for your business and how you're running it. The first one is going to be business, startup, and organizational costs. In this tax deduction, there are $5,000 that is credited for both. So you can receive up to $5,000 in credit or a tax deduction for any of the startup costs that you have. So that could be purchasing certain, materials, things like that, your startup cost. And then the other one is going to be organizational. So if you, formed your LLC or S Corp, all the money that you put towards that, or resources and things like that, you can actually get a tax deduction for. The next deduction is going to be office and tech supplies. So some examples of office supplies are your pens, your paper, like your stationery things, sticky notes, things like that. And the next one is going to be your tech. So that is like your computer, your software, so like your QuickBooks, or it could be like a merchant account that you're using to actually collect payments from your customers. All of those expenses fall under your office and tech supplies tax deduction. The next deduction is going to be your home. And this is one that I did not take advantage of until later on in my entrepreneurial career. But essentially the way that you want to think about it is, let's say you are in a home that is 1,000 square foot and your business currently occupies about 350 square foot of that 1,000 square feet, right? So technically 35% of your home is and the expenses that your home has should be able to be deducted through your business. So that's the way it's gonna go. So the biggest thing for that is just making sure that you make those calculations. So that's anything that's dedicated to your business. So if you have a desk, if you have, you know, a place where your machinery goes, like for me, I have my silk screen machine, I have it set in a certain space, and then when it's time for me to do it, I do that. Right to the right of the camera, I have my whole setup with my Cricut and my heat press, and you guys have seen that. If you don't follow me on my Instagram, you could do that. And if you don't follow me on my Instagram, you can. I'll put the link down in the description below, but you know, I have that set up all the time. So that area, the space that I have, my desk that's behind me, like anything that I'm using for my business, I calculated that up, and then I can deduct that. I can find out what percentage of, you know, my house that is, and then I can use that and take that same percentage out of all of my utilities and things like that. The next one is going to be cell phone costs, and it's within the same range as your home office. So you just need to figure out how much of your cell phone is being utilized for business. So if that's 10%, 15%, 30%, and there's different ways that you can do that. For me, I know that my cell phone, literally I use 95% of it for business purposes, but as long as you know, I text my wife every day and things like that. We talk on the phone, and then my brother, my sister, things like that. Like obviously there's people that I talk to, but for the most part, I'm on my Instagram, I'm posting stuff, I'm on Canva, I'm doing all these different things for my business. So I spend a lot of my productivity, my phone use is for that. So you just need to figure out what percentage of your cell phone service you're utilizing for your business, and then you need to collect that percentage and make sure that you have that tallied somewhere. The next one is going to be cost of goods sold. So for me, I do actually have to, I wouldn't say I get raw material, but since I own a garment printing business where I'm silk screening and I'm embroidering and heat pressing things, I do have to purchase items. So that falls under, you know, cost of goods. So the cost that I need to put out there, the expenses that I incur to collect goods so that I can then flip them and sell them through my seller's permit, all of that I can have a tax deduction for as well. So make sure you're keeping a tab of what you're spending at your vendors so that you can continue or have that big number, so that when it's time for you to write all that off, you can do that. The next one is going to be all labor costs. And this is another one that I had to learn through my experience. But this is how you do it. Anybody that helps your business, anyone that provides a service for your business, they need to fill out a W-9, okay? If you have an employee, and that's a whole nother story, check out this video where I talk about the gig economy, and you wanna make sure that you're not treating a W-2 employee like a W-9, but essentially if you have an actual employee that works for you every single month, you're paying employee tax and all those different things, that's a W-2 employee. So you want to make sure that they have a W-2, and then obviously you will be able to collect and report all of the money that your wages that you're paying them to be able to get a tax deduction. But if you are a sole proprietorship like myself and you are hiring contractors, so for my performing arts program, I was hiring dancers to come in and teach dance at for the contracts that I was able to acquire through the schools that I had. So in order for me to do that, I had them fill out a W-9. They're an independent contractor, and then what I do is I take that information and then I fill out a 1099 and send it to them, and then I send it to the IRS, and the IRS knows that, hey, this is the money that I paid this person, and then it's up to that 1099 worker, that independent contractor, to then report that on their side as well. So if you don't do that, you're not diligent about that, then it's gonna hurt you. Put it up here in the card, but I'll also link it down in the description where I do talk about the different bank accounts that I have set up for my business that have helped me. And essentially, just to give you guys a little snippet of that, I set up a payroll account. And what that payroll account does is it tracks and logs all of the money that's going out to my vendors or my contractors, so that at the end of the year or monthly, I can go in and I can monitor what money was going out to people and to vendors. So it makes it extremely easy for me to do that. So the next one is going to be MILAGE, and I do have a resource down in the description below. They're called MileIQ. They are amazing. They are an affiliate link, so if you do click on them and you do decide to go through them through my link, then I will get a small compensation for that, but it will not be at any additional cost to you, which is great. I don't want you to have to pay more for it. I actually want you to get a deal. But essentially the way that MileIQ works, and I did tons of research on different businesses out there I know that QuickBooks has their own as well, but I like MileIQ because it was very simple, very simplistic, and the great feature that actually sold me was the fact that you could pre-classify locations and trips. So once you download the app, you can go in and you can say, hey, this is my store or this is my vendor, and then whenever you drive from your store to your vendor, it'll automatically calculate, supply pickup. Or if you have another vendor for something different, or you have a particular customer that you're dropping stuff off to, like you can go in and instead of you having to look at and figure out like where's that every single month, you actually can do it one time, classify that trip, and then whenever you do that trip, MileIQ will automatically classify it as that, and it's amazing to have. And the cool thing about it too is, as you at the end of the month, you can see like, oh, you went from here to here. If that's a personal trip, then you can swipe to the left, and if it's a business trip, you swipe to the right, and it'll automatically classify it. It's so great, it's so amazing. So check that out in the description below. The next tax deduction is going to be business travel, and obviously anytime you're traveling for your business, so not locally, but if you like go on a trip or you go to a conference. 2 years ago before COVID, I took my wife and my father-in-law up to the ISS show in Long Beach. Couldn't get that out. ISS show in Long Beach. But we went up there, we had all of our trip was paid for. I wrote everything off, we had lunch and all those different things. Like everything that we did for that trip, for that day, was dedicated to that. Now, let's say we went sooner because my wife and I wanted to walk the beach and do different things like that. So we went up a day earlier. You need to make sure that anytime it's outside of the actual business activity, you cannot write that off. So anything that's travel related, so food, all those different things, you can write off. Just make sure that you keep your receipts. The best thing that you can do is, if you do go on a trip or you do have a receipt that happened during that course of time, on the top of the receipt, just write what it was for. So the next tax deduction that you can have kind of feeds into the last thing when I was talking about the travel expenses, but you also can write off meals. So same thing applies if it's legitimately for your business activity, or let's say you're meeting with a client, you're meeting with one of your team, whatever, you're talking business at the table about how you can better, whatever the case may be with your business, then you can write that off. The same things apply. Get that receipt, write whatever you were talking about. So if you're talking about acquiring, another business, or you're talking about switching vendors, or you're talking to someone about, them coming in and partnering with you, write that, take those notes, and then in addition to that, you should be logging out on your monthly statements so that you just have a better record of doing that. And the one thing that comes with anything really is it's better to do it in monthly increments than do it all at once at the end of the year. And then it's time for tax season and you're not doing a good job at keeping track of all that, it's going to be crazy. Your CPA is going to hate you. Their pockets are going to love you because you're going to have to pay for it, but at the end of the day, it's going to be a headache. Crazy. So the next one is going to be business interest debt. So this is going to be any interest that you are paying towards funding. So let's say you have money, or you took out a loan with a VC or an AI, and whatever they charge you to borrow that money or to borrow that capital, you can have as a tax write-off. So for example, let's say I borrowed $3,000 from an AI, an angel investor, right? And it was a good friend of mine. I just borrowed $3,000 to take care of some business expenses. Now, let's say that they charged me a little bit of money on top of obviously the $3,000. So just to keep it simple, each month I told them, or the agreement is, I'll pay $100 a month, and let's say 30% of that, which is pretty high, but 30% of that $100, so $30 of that 100 goes towards interest, and then the rest goes towards the principal. So that $30 each month times 12, that is the money that I can then write off as a deduction. So some people think like, oh, it's everything I'm paying towards my debt. No, it can't be anything that's going towards your principal. It's literally just the amount of money or the interest that is being charged to you for borrowing that money. So the last couple of tax deductions that I'm going to give you are a little bit more advanced. So for many of you guys, you're just like me. I'm actually not even soliciting any of these. So as I move up and I grow my business, I know that there's other deductions that I can actually take advantage of. So the first one is going to be retirement funds. So anytime that you as an employer, you have a W-2 employee and you have an account or a policy for them for a 401k and you are making a contribution, so the employee and you are making contributions into this retirement account, any money that you're contributing to that account, you can have a tax write-off. So that is going to be the first advanced tax deduction. The next tax deduction is going to be self-employment tax, and this only applies to you if you are making over $130,000 a year, because then you would want to, I say you should S corp yourself so that you can take a reasonable salary, and then there's so many nuances to actually having an S corp, and some people, in my opinion, do it way too prematurely within their business because it sounds good and people lie to them and say, oh, you know, you make $50,000 and you want to save on taxes, you know, then you just do an S corp and take $10,000 and then the rest of it is dividend. No, you don't want to do that, because at the end of the day, you have to pay yourself a reasonable salary, and $10,000 out of $50,000 is not a reasonable salary. Technically, $48,000 is more of a reasonable salary, and then that leftover money technically is going to be dividends. So that's just an example, but essentially you can save on self-employment tax because when you are a sole proprietorship or smaller corporation or smaller business, smaller entity, you tend to pay taxes twice for self-employment tax, which hurts, but you just got to make sure you educate yourself on the tax laws, which is why you're here, right? Is to help give you some information. Like I said, I'm not your attorney, so don't just listen to some random guy on YouTube. So the next tax deduction is going to be pass-through tax deduction. So when the Tax Cut and Jobs Act was passed, there was a law in there that was called the Qualified Business Income Deduction, which allowed for business owners to automatically deduct 20% of their income. So for example, if I made $100,000 within my business, 20% of that, or $20,000, would automatically be deducted. So then I would only be taxed on $80,000, which is a lot. But this is only for certain types of entities and businesses, and also income thresholds. So you want to make sure that you kind of fall within that. So do your research and figure that out. So the next one is going to be health savings account, and essentially this is accounts that you set up to help you during times where medical needs are needed. I hope this video was very informative to you. If you found something that you learned in this video, please give it a like. If you're thinking about starting, managing, or growing your business or your side hustle, please consider subscribing to my channel. You can do that by hitting that subscribe button, also banging on that notification bell so that you're notified whenever I drop some entrepreneurial content for videos just like this. I'll see you guys in the next one.